If you have always wondered when to buy and sell a stock, then you should watch this video. So in this video, I will tell you what are those situations in which you can buy a stock and sell a stock with absolute clarity. By the way, if you have not subscribed to the channel so far, please click the subscribe button and become a subscriber so that you are alerted about the future videos which I upload in the platform. Hi, I'm Harshit Mohan. I am a stock market investor and trader by passion. I am father of a lovely daughter, husband of a loving wife, and I'm also the founder of Peaceful Wealth Community. So let us quickly share my mind map and you will see how we can decide when to buy and when to sell. So let us first of all understand when we can enter, like when we can buy the shares. So when to enter, like when to buy a share. So one situation is when there is a bad news around the company, and that bad news is something which is temporary in nature. Okay, as Warren Buffett says, buy when there is blood on the street. It basically means that when everyone is scared, that is the best time to buy. However, it requires a lot of conviction and confidence in order to buy. But then those people who do this, they get a lot of rewards in the end. So there are so many situations in the stock market when there is a temporary bad news around a company. For example, quarterly results. So no single company in the world gives profit every single quarter. Okay, there may be some situations in which a company has not given good quarterly result, and it happens for even the best of the best companies. So when you see a particular quarterly result has not gone up to the expectations, you will see that there will be a tendency among the investors to sell the shares, and that will be the time when the price of the share will come down, and it will give a very good opportunity for a value investor to invest in that company. So always keep a watch on the quarterly results of the companies, and if some company is not doing well, then simply invest into that company if the quarterly result is out. But you should also be confident that okay, it will continue to do well in the future, and this is just a temporary bad result. Moving on, the next good time for investment is during the election season, especially in India during the general election, like the central election. So if there is a government change, okay, let us say BJP is in power today and tomorrow let us say some other party comes in the power. The stock market does not like the regime change a lot, okay, because when the power changes from one party to the other party, because of their ideological and political differences, uh, some of the ongoing projects may be put to a halt, and some other new projects may be restarted, which may cause some disturbance around the businesses which are operating in the country. Okay, and because of that, the stock market does not appreciate a lot if there is a government change from one party to the other. And in those times, in those situations, the market falls pretty much. I mean, it falls quite a good number. So that also gives you a good opportunity to invest into your favorite companies if there is a result during the election season which has not gone well with the stock market. So that is number two. Let us look at the third reason. The third reason to invest: geopolitical crisis. For example, right now Russia-Ukraine issue is going on, but you also know that this issue will not last forever. Okay, the possibility of having a World War IV and all that, it's very remote. It's very remote. All right. Now, in such situations, the market panics and there is a huge sell-off across the board. In this situation, you can take advantage of it and you can invest into your favorite companies because the market has fallen quite a lot. And it is not just this war situation, it may also happen that there is a trade war going on. For example, so a few months back, China and US had a trade war which was going on, right? And because of this, Chinese stock shares have come down quite a lot. So if such is the situation happening in your country, then just you can take advantage of it and you can invest, because that would be a good time. So we have seen bad company news, election season, and geopolitical crisis. Now fourth is a health crisis. So for example, COVID came and the market fell like a falling rock. But again, it rebounded because everyone knew that okay, this is a good time to invest. Okay, and there was also a lot of surplus fund flowing around the world, supported by the federal banks and the RBI, and all the central banks. So when there is a health crisis, you should understand one thing very well, that now given the technological advances that all the countries are having, no health crisis will last forever. Okay, definitely a mechanism will come out very soon which will address that health crisis very well. And when that happens, of course, the market will bounce back like a dead cat. So, always look out for opportunities which cause temporary sell-off in the market, because it gives you a good opportunity to invest. So, these were some of the points related to buying around the fundamentals. Like you are looking at the news, you are looking at the events happening in the international and the national level, and based on that, you are doing your buying decision. However, there is another school of thought which goes into the investment, and that is around the technicals. So you can do your investments based on the technicals also. For example, there is a very famous indicator, 50 moving average and 200 moving average. So whenever the 50 moving average crosses above 200 moving average, it shows that this particular stock is in an uptrend now, and it gives you good opportunity to invest, right? So everyone has a different set of preferences when it comes to doing the investment. Some people don't like technical methods, some people like technical methods. So it is up to you. What suits you better, just go ahead with that. Alright. So we have covered 5 points on when to buy a stock, like when to enter. Now let us see, when do we exit from a stock? When do we sell it? So the number one reason is when the business fundamentals are no more strong. For example, Nokia, if you are an investor in Nokia and you saw the tsunami of Android phones coming in the market, and you also saw that the Nokia is not willing to compete with these people, and Nokia's business strategy is not around the Android. That could be a good signal for you in those times to come out of the Nokia stock, because you knew that the business fundamentals are not really very strong. Similarly with Kodak film cameras. Kodak never saw the tsunami of digital cameras coming in the market. They took it very lightly, and what happened? They perished. So as an investor, when you see that there is some change happening in the market, in the business, which the company is not focusing much, the fundamentals are changing, then it is a very good time for you to come out of the company stocks and invest into some other company. Alright? And it can also be gauged from the fact when there is a lot of negative publicity of the company's products. Okay, so when there is a lot of negative publicity, people are criticizing the company's products left, right, center, everywhere, that is a good time to come out of it. And second, when you see that there is an excessive competition which has caused a lot of dent in the margins of the company and profitability of the company, then that is also shows that the company is under stress. So all these are nothing but just change in the fundamentals of the company. It may happen that the company may come up with a strategy to address these issues, but then if you see that the company is not coming up with a sound strategy, then it is always advised that you come out of it. Next, when there is euphoria in the market. Euphoria means when everybody is investing in the market, when everybody is so enthusiastic, so excited to invest in the market, everybody is looking at a stock market like a money making machine, and whoever you talk to, your neighbor, your barber, your car wash person, everyone, whoever you talk to, everyone is investing in the stock market. When you see such a situation, it clearly shows that there is euphoria in the market, mass euphoria. And whenever there is a mass euphoria, stock market comes down really hard, really hard. Okay, so be very careful in such situations. Always take out some capital from the market. And third, as I told you, we can use technical indicators. If you cannot rely around the other methods, just follow a technical indicator. And as I gave you an example of 50 moving average and 200 moving average. All right. So I hope now you understand some of the ways using which you can enter into a company and exit from a company. All right. So that's all in this video. I hope this video gave you a lot of inputs on how you can make your investment process better by timing the market in a better fashion. So write in the comment box below what did you learn from this video and what other topic you want me to create for you. Alright. So thanks for watching. Have a good day and take care of yourself.